Hi guys, welcome back to Day Trade Diary. Today is Tuesday, the 19th of May, 2026. It is day number 81 of our documented trading journey. So coming up to 3 months now since we started. I'll give an update about what happened in the past 24 hours since our last update. For Oanda, we're at 15,588 with a 46% exposure. And for Binance Bitcoin, we're at $10,309 with a 21% exposure. So the exposure in Binance is slowly creeping up. It's been a bit choppy today, which I will show you in a second. Total net asset value, $25,897. That equates to almost exactly 10% gain since we started 81 days ago, with an absolute return of $2,367. And as you know, we trade primarily with a grid or ladder strategy, where we just put buy limit orders on the all the way down, and then take profits on the way up. This is what the net asset value curve looks like since we started on February 22nd, 2026. You can see it's quite a nice trend up since this big dump here, but we like the dips because that's our only opportunity to load up on our exposure here, where we have big spikes down, and then a smooth ride up where we take profits all the way. So things have been stagnant for the past maybe 5 days. As you can see here in this chart, the last 5 points have been pretty much clumped together. But yeah, we're hoping that would change soon. So let's go straight first of all into Bitcoin. So in the past 24 hours, we had 2 buys and 2 sells, according to my records. Yeah, it's this 2 buys and this 2 sells. So yeah, it sold up here at a 77.7 level. So yeah, we managed to snipe the top because our sell order was 77 and it sold here at 77.7, and then it dipped down, and then we bought, another one here, and then we sold another one here. So the grid strategy is working nicely here in this tight ranging market. Let's look at the daily chart. So what do you think? Does it look like it's going to continue up, or do you think that a bigger dip is coming? Who knows? We don't care because we're trading on a grid strategy. We believe in the long-term thesis of Bitcoin. So if it goes to 50,000, we'll just buy all the way down and wait it out. Drawdowns will be painful, but I think we can mitigate some of that risk because we will be in taking profits on the way up. Just want to show you this as well. So this chart shows the returns for the main assets that we are deploying. Let me just move this here. Okay, so the blue line is our trading performance, and orange line is Bitcoin, and silver is, of course, silver. So you can see we are in the middle of these two assets, obviously, because it's more or less a 50-50 split between Bitcoin and silver. But this doesn't tell you the full story of our performance, because if you look at silver and Bitcoin, the gain has only been, if you average these two out, 2%. If you have a 50% silver and 50% Bitcoin allocation, your overall return since we started on February 22nd will only be 2%. However, our performance, the blue line, is 10%. So we're doing 8% better than if we had just bought and held 50% silver and 50% Bitcoin. So I hope that is clear. Okay, let's go next to CFDs. What activity did we have? We had silver activity. Okay, let's look what happened yesterday. So we had one buy and one take profit. So I believe the take profit happened first. The take profit happened around the 850 level, which is this green line here. So it took profit yesterday around this candle, and then the price dipped down again, and then we rebought at the 76 level. So yeah, the buy was this one here, this exact trade here, and then the take profit was for this trade from this level, but we took profit around the 78 level. So one buy and one take profit, and there's no other activity for the other assets. But we can scroll through and have a look. Well, first of all, let's look at what assets that we have. Gold. Okay, this is what we have open at the moment. 5 trades at 0.1 units or ounces of gold, and then we have 2 more trying to catch the bottom or the spike down. Let's see if it hits. Okay, that's gold. Doesn't look too great, the chart, but we believe gold long term. What else do we have? Bonds. Bonds look terrible, don't they? There's like a multi-year downtrend. To show you the monthly chart. Since COVID, bonds have been in a terrible bear market. Yeah, because the stock market has been absolutely ripping. Inflation has been very high. Yeah, and overall the stock market is doing super good. So this is what the 30-year bonds look like. Trying to be clever to buy the bottom of it and build a position, but it doesn't look good. It doesn't look like it's going to be bottoming out. I think once it starts to go up to 120, it forms a little cup, then we can start to go in more aggressively. But until then, I'm quite cautious about bonds. Okay, let's cycle through the rest of them before we wrap up. China A50 seems to be dipping recently. Okay, that looks good. See, this is why we don't chase. Yeah, if we chased it, then we'll be suffering a big drawdown now. We'll be patient and then we wait for our entry here. So take a peek at oil. Oil is very strong, but I hold some oil stocks, and they don't seem to be doing very well at all actually. So I'm not sure why there's no correlation between the crude oil and the oil stocks. Copper is dipping, similarly to China A50 that we saw, and silver and so on. So yeah, let's see if it hits our limit orders on the way down. S&P 500 lastly, yeah, seems to be consolidating, not rolling over yet, and that concludes it. Okay, so that concludes my update for today. I wish you all a good day. Take care now. Bye bye.